Okay, very good morning guys, hope everyone is well. It is Wednesday the 4th of April, so going to do the usual routine. I'll go through some of the major headlines we've had this morning, and then Sam's going to come on and look at the charts from a technical perspective and what he's looking at for today's session. So, getting things straight underway, and really just starting off with the recovery that took place late in the Wall Street session. Just a quick look at the S&P here. Obviously this was the holiday thin session that we had on Easter Monday. US markets were open obviously, but a fairly big down day. Tech sector again under pressure and amid this ongoing tariff spat at the moment between China and the US. But the main point I'm looking at here is the recovery that has been seen thereafter, particularly into the latter part of the US session. So about 7:30 last night, going in towards the close, managed to pull back and actually at the close of Wall Street last night, we paired pretty much, I'd say, most of that sell-off that was seen on Monday. The closing prices from a percentage point of view, the S&P was up 1.25%, Nasdaq up 1%. So a good reversal in some of those tech names, and the Dow Jones was up 1.6%. Talking of the tech names, obviously one of the key companies that people have been looking at was Amazon, because of the situation where Donald Trump has been escalating the tweets specifically aimed at that company. Well, this is one of the things that is said to have helped the tech sector yesterday, because despite Trump's tweets, the White House came out and said they are not talking about Amazon action. So the context here being that insiders at the White House have said there is no active discussions about turning the power of the administration against Amazon, according to 5 people familiar with the matter. None of the 5 people were aware of any ongoing discussion about turning Trump's tweets into action against Amazon, not on the legal or regulatory front, or even regarding its resilience in the US Postal Service. So obviously this did help. Amazon outperformed the index or the indices in that respect, and obviously that's alleviated some of the pressure, at least on the tech sector. Going back to this morning though, the main dominant theme does remain Trump and this tariff talk. That by far is the thing to watch out for, I'd say, going forward. And as you can see this morning, that equity move is being paired now. You can see the S&P is already below pivot, having had that as a line of support overnight in the Asia Pac session. Europe's come in and we've just edged a little lower. The DAX under a bit of pressure as well this morning, so just keeping an eye on the bottom end of yesterday's range. Is not too far from where we are at the moment, and gold just breaking above the highest levels seen in the Asian session, and just edging up about a $4 gain. So very slight risk off tone to proceedings to get things underway. So what is the current state of play? Well, the headlines are that China is set to hit back at Trump's tariff list later today, and in fact in less than 1 hour's time. So let me give you some of the details here so you're fully armed for this event. So the US has released a list dominated by high-tech industrial products as targets for its proposed $50 billion worth of imports. So we've known about the actual figure. This is some more of the underlying detail that's been coming. Now, the deputy ministers from both the Commerce and Finance Ministries of China are due to hold a press briefing local time Beijing at 4:30, so that's 9:30 AM London time. So in essence 1 hour's time, China are going to be coming out. Now, I've just clocked some breaking news on Bloomberg, and some of the headlines regarding China have said that they still want to resolve this issue diplomatically. So I'd say the base case scenario here is that China do not retaliate in terms of aggressive action to counteract this. They have said that they would immediately appeal to the WTO, the World Trade Organization, and they were ready to take countermeasures on US products with the same intensity and scale. That was last night, but more recently a couple of headlines have flashed down the terminals saying that they still want to resolve this by means of dialogue rather than going down this kind of tit-for-tat route. US officials, though, the kind of state of play is they identified 1,300 product lines that benefit unfairly from government industrial policies. and this is what's prompted China now to speak out in that respect. Okay, I've just seen my computer's just blacked out, so we go back to the charts. So yeah, this is I'd say is what you've got to look out for. I guess some of the talk at the moment is about the tariffs may only have a minor impact, according to an analyst research report I was reading this morning. The reason they're saying this and suggesting is that increasing levies by $12.5 billion on Chinese shipments to the US, which came to $506 billion last year. So on an average, looking at what's come out on the details, that's an average tariff increase on overall imports from China of just 2.5%. The main risk, of course, is about retaliations in that respect. Okay, just making sure my screens are all coming back on, just bear with me. Okay, looks good, back on. Alright, so going on from this, I would say just keep an eye out, and 9:30 will be key to what China say. I don't think really they're going to come out and escalate this much further, to be honest. The one chart that I wanted to just refresh your memory on was this one that the chaps at ING put together, which is the scaling effect of the 4 different scenarios, going from the kind of stage 1, which would be what they've deemed a Trump lone trade attack. This is the US speaking out quite vehemently, as they have done, but retaliation being fairly minimal. This would be the most beneficial for the US in that sense, and be most negative for the other parties, whether it be Europe, China, the rest of the world. Then you go through the kind of scaling effect of tit for tat. US escalates reciprocal tariffs to the final and most destabilizing for global markets, which would likely result in a global downturn, sustained move lower in global equities, and a flight to safety in US debt, if there was a no-holds-barred policy stance and an all-out trade war. I.e., so far, China has kept a fairly even hand to the proceedings. Europe likewise. If they were to now match the US, which prompts the US to go another step further, that then sees the Chinese retaliate, US go again, so on and so forth. You can see how this quickly could get out of control and play out very negatively in that sense. The one thing that this is having an impact on is if you step away from the market for a second and think about what is it that Trump's doing, you can imagine in certain parts of America, by Trump taking such aggressive action against China, of which he specifically targeted in his campaign leading up to the 2016 election. You know, he is delivering on that front. You know, he is taking action on what he promised. And actually, this is playing out in the latest Rasmussen poll, which is one of the most widely followed ones in the States. Trump's rating, his actual approval rating, is at 49%, which is up from 42% back in the end of January. So I did see some tweets about this as well. They were talking about yesterday, I think his approval rating at this point in the presidency is higher than many other presidents that have been in the White House. So, you know, you've got to understand about the way of which he is perceived by a large majority of Americans. You know, the American First policy is a very strong political stance for a large proportion of the voting electorate in America, and as we've discussed before, this is obviously crucial for those midterms coming up at the end of the year. So it's just quite interesting to see that. The one takeaway I would say from a market perspective from this, though, that does make me slightly worried, is that Trump is a guy that plays or takes he pays a lot of attention to this type of information. Obviously, when the stock market, as we saw, was going up to record highs, his frequency of tweets was very high. He was even tweeting about this last night, about how great a job he's doing, and look how popular I am. My fear here is that Trump now sees what type of popularity that he is getting on the back of being quite vocal and speaking out on the trade front. Does he start pushing the envelope and taking this rhetoric to the next level, thinking that Americans are liking what he's doing? They'll like it even more if I start to get even more aggressive against people like China and elsewhere. If that were to occur and you back China into a corner, well, they're going to come out fighting, and then you go down this route of, if they do start upping the ante themselves, making sharp counter tariffs against the US, this then quickly starts to become a much bigger negative for markets. And then you'd be expecting then the theme to be lower equity markets globally in that type of situation, which has already been quite a catalyst for the uptick in volatility recently. So something to just be aware of. I get slightly worried when this sort of information comes out, because of what it does to Trump. It almost reaffirms what he's doing is the right thing in his mind, and does he start to push even further and more aggressive in that direction. Okay, a few other things to be aware of from a market's point of view. Fed's John Williams from San Francisco goes to the New York heavy on economics, light on markets. This is just talking about now, if you remember, Janet Yellen, Stanley Fischer, Dudley were all the senior executive team who had permanent vote rights at the FOMC. So John Williams has basically been put in as one of the deputies to supplement Jerome Powell, the Fed chair. Now, reading a couple of different analyst notes this morning, some of the take has been that John Williams is a fairly centrist character, and so therefore that might mean that this idea of multiple rate hikes with a more steeper rate trajectory going forward becomes less likely. But I'd say that's already been really put on the back burner with this escalation in the trade tariff talks that we've had at the moment. I think the idea now of 4 interest rate hikes and that kind of more bullish calls from the likes of Goldman's of potentially 5. I think 5 definitely not. 4 is looking less and less likely as time goes on. And so the Fed, it seems for the moment, still remains most logical that they remain committed to the 3 rate hikes for the time being, with June priced for the next hike at this present point in time. This was another chart that I just wanted to show you as well, and one of the reasons why, I mean, stock futures looking a little heavy here just as I'm speaking, but one thing that was quite notable overnight, and one thing that I did say, is that although Trump keeps pushing this, China at the moment remains relatively calm, and the reaction overall has been somewhat benign by the market. Overnight in Asia, this is the potential tariff exposed China stock list, and as you can see, they're hardly in panic mode. The majority of these most exposed names to potential tariffs increases, they were predominantly higher overnight. So again, it's going to be, well, look, just seeing some comments coming out now on the wires. China plans a reciprocal 25% tariff on the US chemicals. So here we go. Stocks just pressing fresh lows on the back of this latest headline. Gold, you can see, has just caught a bid. The dollar's weakening, and both major pairs have just shot higher. So again, let me just bring this up for you guys, and you can see the headline. So let me go back to the charts. You can see both major pairs taking a bit of a lift here. Gold getting an additional boost, and DAX, keep an eye on that previous day's low, and a bit of pressure in the US futures as well. So let me just bring up the comment so you can see it. This is why you've got to be prepared watching the headline news as to be the catalyst for these types of movement. So here we go. These are the comments. China said to add tariffs on 106 US goods items, a levy on 25% reciprocal tariffs on soybeans, 25% US chemicals, and 25% reciprocal tariff on US vehicles as well. So again, China's taken it up a notch, and consequently a little bit of extension of that risk-off move that we were just seeing materialize this morning. So again, these comments front-running the official speech we're expecting from the Chinese ministry in about 45 minutes. Yeah, you can see then how important that really this tariff talk is. This is the dominant theme. If you're looking for macro drivers at the moment, I'd say it's heavily tilted towards this being the major factor for market sentiment for the daily trading session, for sure. All right, a few other headlines and then I'll hand you over to Sam. This I thought was quite interesting from a broader perspective, from a sterling point of view. I don't think this by any means is tradable news. I'd say if you're trading the cable pair, really you're trading movement of the dollar. And as we've just saw, retaliation effects from China, escalation on trade tariffs equals dollar weakness in that respect. So this I'm just pointing out from a broader UK economics point of view. Shop prices, according to the British Retail Consortium, the BRC, British shop prices dropped in March at the fastest pace in more than a year. So if you think about it, the last UK inflation reading, we were tracking on an average of about 3%. We peaked at 3.1% a few months ago in UK year-on-year CPI, and the last reading dropped to 2.7 as this kind of depreciation post-EU referendum effect of the sterling weakness starts to phase out, and those inflationary pressures start to ease, and we're seeing that play out now in the data, further confirming that the Bank of England were kind of right to not aggressively pursue earlier tightening, because as they predicted, inflation, it looks like inflation pressures are starting to show further signs of having peaked and are going to ease going forward if shop price index is anything to go by. And so this, in my mind, with wages in the UK picking up, inflationary pressures continuing to ease, just allows more room for manoeuvre for the Bank of England to hike interest rates in May, as they're anticipated to do so. Quick look at the calendar of events coming forward. As I said, we are kind of headline watching for updates on this trade situation, but there are a few economic data points to also be aware of for today. Looking for the European CPI number, that's going to be the kind of highlight for this morning. That's going to come out at 10 o'clock. Remember, front running this is the Chinese press conference at 9:30. Then going into the afternoon, you start getting the precursors to non-farm payrolls, which of course is due on Friday. So you get ADP, that's going to be due at 1:15. Quick look at ADP. To be honest, the job situation in terms of headline job creation, I don't think the market's really bothered. By this, what I mean is twofold. One, the actual job creation figures are fairly robust, consistent. I think payrolls will come in another 200,000 again. It's not about job creation, it's about the wage number and what trend is that number taking, i.e. is it improving, which is given the kind of pre-indicator of forthcoming inflation in the future. That's what's key. So ADP, I don't think really is going to be too much of a market mover, and certainly not in the context with markets are so focused on the kind of trade talk at hand. Other numbers though to be aware of, you've got ISM non-manufacturing, again keep an eye out for the job constituent, and then you've got factory orders coming out of the US, and then you've also got the weekly Department of Energy's oil inventory numbers. I did pop those numbers into the chat room earlier for those interested. This is what it was essentially. There wasn't really any meaningful move in crude futures when this was released. It came in a draw of 3.3 million in the crude, a build of 1.1 gasoline, 2.2 distillates, and Cushing was a build. That's pretty big actually for Cushing, 4 million. Alright, tariff talk is the main thing though. Just looking back at the charts, the DAX just breaking that low from yesterday. So you can see this negativity is picking up pace on these latest headlines. That DAX through the low, it's a fresh weekly lows now in the futures. Okay, I'm going to hand you over to Sam and see what his thoughts are. Interested to see what his levels are that he's looking at today. So have a good one, guys.
Yeah, well, just on that DAX, you can see here, I just posted in Trading Live the chart to make it a bit bigger. You've got a trend line, well, not just in the DAX, but a couple of these equity markets, and the DAX in particular. Let me just get that on. Get the trend line up here. You can see it's not too far away from coming to where that sort of meets up here. You can see using those previous lows. Let me just move the camera out of the way. From 26th and the 28th, so worth keeping an eye here on the DAX. And we switch over to the S&P. It's a similar sort of picture. In fact, we're just getting a bit of a breakthrough there now for the S&P. The low that we made on the Monday, of course, markets closed here in the UK, but we're getting a breakthrough of that there for S&P, and the Dow is still pretty much near the lows it has been for the day. Let's see if we can get a bit of a trend line on there as well. So starting to get a break through to the downside here on US equities. Nasdaq just making its way down to that S1 quite quickly. We keep an eye at the same time obviously on the dollar yen and gold as well, and dollar yen just pushing below that pivot level. And in terms of where could be half decent support or profit levels to sort of take a bit of this trade off for those that are in, you've got decent sort of price action here around sort of the afternoon low in the dollar yen that I'd be taking into account, and then a bit further down if this move was to materialize a bit more to the upside. You can see, as well as the sort of the fundamental change, a bit of a technical break of that trend as well, so maybe bear that in mind. If we were to retrace later on, you could have a bit of resistance to the upside around there. Gold at the same time, as I mentioned, pushing to a new high, and you can see a decent break of that trend downwards yesterday, and we're not too far away from where R1 is, and just above there obviously you've got the highs that we made yesterday afternoon. A couple of interesting support levels to be aware of for the downside, where we made a initial low before pushing through in gold that you see here. If we were to come back to this point 1340, I'd expect a decent level of support, but again that could be sort of waiting later on, and in terms of the way these markets are moving, it could be a while before we get back down there. So for equities, definitely worth keeping an eye on. The DAX coming to an important sort of point as well in the market, just having a tiny bit of a breather. Have a look over at the currencies. Obviously we've got some data out in well, what, about 30 odd minutes. The pivot for euro has already worked quite well, but decent sort of level of sort of potential resistance. Was good support yesterday before we broke through. I'd be keeping an eye on that, but of course the dollar just weakening a bit here, so perhaps make me a bit less keen to take this on. Decent test of, well, I guess of yesterday's low as well, so we're sort of breaking out of that mini range that we were in over the last few days yesterday. So we're keeping an eye on this pivot in terms of wanting to take it on as a short, with the dollar just coming to its lowest point that it's been for quite some time. I'd be less keen to be looking at going short from this pivot. And the pound, if we have a quick look over, you can see as well, just coming off its better of its sort of higher levels following this story. Seems a bit more mid-range now. I think for the pound, if we were to get back down below the pivot around 140.93, that's going to be quite an interesting area to the downside, a breakthrough there, and you can look at yesterday's lows down to S1. But looking for perhaps a bit more weakness for the dollar, then really you're going to want to sort of get a nice clean break above 41.26, and then R1 and the highs of the day don't seem too far away there. Have a quick look over at Aussie dollar before we come on to oil. See, actually this market just on the lows of the day there, still quite range bound. I'll be keeping an eye on yesterday's lows, and the low from Monday at sort of marking up at the bottom of that range. I think that's quite a key area. The high of the day today, we've had good price action around there on the 27th, and it was a high today as well, so decent opportunity. I mean, obviously it's early hours, but one to bear in mind. If we do come a bit lower down, I think I quite like the look of sort of S1 and yesterday on Monday's low as a target area. Just keeping an eye. We'll have a quick look back at US equities. I appreciate, obviously you guys are probably trading this at the moment, and S1 not far away now for S&P. The Nasdaq trying to have a little breakthrough of the low, that S1 low. So get this trend on here, matches up a bit lower down, so still perhaps a bit of room to go in terms of making a look at that trend. Obviously yesterday we closed above the 200-day moving average on the S&P. Let's just have a look where that comes into play at the moment. Obviously it's still very much been talked about in the headlines. Let me just get this on for you. So yeah, just having another breakthrough to the downside there of that. So S&P and equities in general just coming under pressure. The DAX, you've got to imagine, is going to be testing that trend line soon. Let's have a quick look to see if it has come down. Another little push to the downside there There you go, the break of that trend line. So equities just continuing to push lower here. Aussie dollar under pressure, gold still trying to push, and the dollar yen, yep, on the lowest it's been. So the yen just strengthening there against the dollar. Another push, dollar weakness here. Any questions, obviously, please get them in the chat. There's been some half decent opportunities today, so please do share any trades. FTSE as well, just coming down to the S1. So equities in general under quite a bit of pressure here. Yeah, S&P futures down 1% after China plans for tariffs, so 1% move already for equities in the day. So I'll let you guys get on. Obviously got data coming out shortly, but hope you all have a good trading day, and long may it continue like this.